Hello, everyone. Welcome to AAA Academy Lessons. My name is Delia. I'm an ex-banker and hedge fund manager with 20 years experience in traditional finance markets. Currently, I'm a co-founder of AAA DAO, a non-custodial, decentralized, and over-collateralized lending platform. Over the next few months, I'm going to be your instructor covering the topic of decentralized finance, which is an exciting new area that is changing real fast. This is a series of 10 lessons that will cover the topic of decentralized finance, which is an exciting new area that is changing very fast. If you have any questions, please reach out to us on AAA Discord. So now let's get going. So today I'm going to give you an overview of what DeFi is. But before we talk about DeFi, first let's talk about what is finance. So finance is a broad term that involves the creation, management, investment of money and financial assets. There are many different types of financial assets and financial instruments. For example, bank deposits, stock, bonds, loans, derivatives, and so on. Financial asset essentially is a non-physical asset whose value is derived from a contractual claim. There are many different types of financial services that we use on a daily basis. So, for example, banking, lending, borrowing, insurance, securities, trust, funds. And financial market is a marketplace for trading financial assets. First, let's look at the traditional finance. So traditional finance is done through centralized financial institutions that provide those financial services to us. There are different types of financial institutions depending on the type of financial services that they provide, such as banks, securities companies, fund management companies, and so on. And for more details, please see the Title 31 of the United States Code. There are a number of characteristics for those financial institutions. First, typically, they hold custodies of customers' funds and assets. For example, my money in my bank account is essentially in custody at the bank, and the bank has the power to freeze someone's accounts if there is illicit activities, for example. Financial institutions serve as intermediates for transactions. For example, if I want to transfer money from my bank account to my sister's bank account and we use the same bank, then the bank will decrease the balance of my account and will increase my sister's bank account, essentially serving as the intermediary for the transaction. Of course, if we use different banks, my bank will communicate with my sister's bank and perform the transaction as an intermediary. Those financial institutions have a lot of power. For example, they can censor the transactions if there is a type of money laundering going on. Also, those financial institutions take fees for providing those services. They are very highly regulated and they need to implement strict onboarding and continuous compliance rules. And there are different types of rules and regulations, for example, the KYC, Know Your Customers, AML, anti-money laundering, and CFT that combat the financing of terrorism. As a result of how those financial services are provided, the customers usually have no privacy to the service providers. So, for example, my bank knows my real identity and also knows the full account transaction information from my account. And as the nature of how they operate, again, holding customers' fund and providing intermediate services for transactions, they essentially need to be fully trusted to operate correctly and securely. So we place a lot of trust on those financial institutions. So in contrast, what is decentralized finance or DeFi? Essentially, DeFi is a new type of financial infrastructure that is open, permissionless, and it's built on top of a public smart contract platform. To determine whether a financial application is decentralized as part of the DeFi, we have to go through a three-step process. So first, we look at the custody and settlement. Are the financial assets controlled by users? If not, then that's clearly a centralized application. And if yes, we go to the next step, looking at the transaction execution. Can someone single-handedly censor a transaction execution? If yes, that means it is a DeFi settlement, but with a CeFi intermediary. If no, then the next question is, can someone single-handedly censor the protocol execution? If the answer to that question is yes, then this is a centrally governed DeFi. And if the answer is no, then this is a purely decentralized financial application. Let's look at a comparison of a different characteristics between centralized CeFi and DeFi. Traditionally, centralized finance is a permission system which typically operates on a closed source system built on top of centralized databases. You need approval and agreement for third party to use and build on it. It is a custodial, so assets are custodied by licensed third parties. It has centralized trust and governance. Single entity is responsible for upgrade decisions and administrative privileges. And it knows the real identities because users register with real identity and they go through KYC or AML compliance. In contrast, decentralized finance are applications and services that are permissionless. They are typically built on open source systems on top of permissionless blockchain. And anyone can use on top or can build on top of those financial services and operate with them without needing any third-party approval or agreement. They are non-custodial. Assets are not custodied by a third party. Decentralized trust and governance, they are trustless. No single entity is responsible for upgrade decisions or administrative privileges. And users usually do not provide real identities. What are the advantages of using DeFi? So DeFi services provide a number of advantages over traditional or centralized finance. One of them is that they can be more efficient by removing the rent-seeking intermediaries. And DeFi enables open finance and universal accessibility where anyone can use the financial services. It's very inclusive. DeFi also provides transparency and the public verifiability. Anyone can instruct the smart contract code and verify its execution and the state of the system, and hence verify the execution of the financial services. DeFi also enables self-custody and its censorship resistance, where the users hold their own financial assets and therefore cannot be frozen or taken away. DeFi also enables automation and programmability through the smart contracts, and there is composability and interoperability as well. DeFi is a great playground for fast innovation, where different applications often are much simpler and faster to develop than the central finance counterparts, and also enables new capabilities such as atomic composability, which does not exist in the CeFi world. Given those advantages, DeFi has been growing rapidly by a metric called TVL, which is the total value locked, which measures the total value of the financial assets deposited and locked in different DeFi applications.